The market doesn't know what keeps you up at night. It doesn't know when you want to retire, and it doesn't know how old you are. The simple truth is, the market doesn't care. But if you care, you've tuned into the right place. You're listening to Investor Resources, bringing clarity to the confusing world of finance. Here are your hosts of Investor Resources, Don Creech and Perry Sykes.
I'm Don Creech.
And I am Perry Sykes, and welcome to the Investor Resources Podcast. We would appreciate it if you would go ahead and subscribe to this podcast. Make sure you keep getting the latest and greatest from us. And if you would not mind forwarding this to your friends and family and coworkers, people that would be interested in what we're talking about, we'd really appreciate that also. Thank you.
So we just finished up Thanksgiving as we've recorded this, and we are in the season of the holidays where we're often grateful that the year has gone by and we've survived what sometimes were difficult circumstances in it, but it's generally a time of Thanksgiving that extends into the new year. And that's where we are. However, as we deal with the market, there are fear mongers galore. Anytime, and we've had another issue, another podcast where we talked about the market being at all-time highs, and that brings out
Right.
bear market forecasters. Can't go on. This is too high. It's been too high, too long, too fast. You name it. There's a reason why this should not go on. This cannot persist. The bear market has to be right around the corner. He's going to come out of hibernation, and this is all going to fall apart. And you should have been buying gold anyway. It's why you're buying stocks. It's
There you go.
an argument that runs along that line somewhere. One of which is consumers have too much debt. My goodness, they're spending money on credit cards. How on earth can this economy keep on going on credit? Hey, folks, credit is what runs the world. And credit has been driving the market since post-World War II.
There you
So,
go.
yes, we have credit card debt, and it's at all-time high. It's not at all-time highs. It's at higher than it has been recently.
Right.
But it's not anywhere near relative to income levels. The great financial collapse that we had in '07, '08, and '09, debt was really out of whack relative to
Right.
income. People were
Yep.
speculating because mortgage money was available. The banks learned that that's not a good deal. If you don't have income, we do not want to lend you money. Oh, imagine that. I'm
It's
a,
funny
I'm a
they had to
lender.
learn that, right? It's like you figure they would know that, but
They want to get paid back. What a
there
concept.
you go.
But basically, while we have high credit card debt, the income to debt ratio is much stronger than it was a decade ago. So the number being big is kind of like the Dow at 6,000 is a problem. Well, the number's big. So when the market's off 100 or 500 points, it's no longer the concern that it was in 1987
Correct.
because it's the relationship between what's generating that and what is. So mortgage debt, there's an uptick in some delinquency, but it's a minor uptick. For the most part, anybody who owns a home that has a mortgage that's in trouble is going to sell the home because there's equity to be had. This is not going to cause a collapse of the housing market or the mortgage market as it did in the past.
No, there's not a problem with the home coming on the market right now. In fact, that's if you're a real estate agent, if you're a realtor, that's the problem. You can't get a home to sell. There's not enough inventory out there. So if someone is in trouble, they don't have any problem moving that home. They're not going to get stuck holding the bag because prices are tumbling down. That is not occurring. So even if someone is in trouble, there's an exit avenue for them pretty quickly there to right that ship and get them out of the deal and let somebody else buy a home.
In the real estate area, probably the only area that has some difficulty that is going to take much longer to resolve is the commercial real estate office buildings.
Right.
There are a few office buildings that are being converted to residential, but most of them are not constructed with power and sewer situated in such a manner that they are amenable to a conversion. Those buildings
Yep.
are going to need to be torn down. Those delinquencies did hit more than 10% recently. and that is not as high as in '08 and '09. So it's the second highest level of delinquencies in commercial property. If you own commercial backed mortgages, you might want to take a closer look at what you actually own there and what the underlying assets are. And if it's a single property asset, give it serious review. Time may be running out for that particular asset. But we turn around and look at something else we've been through. We've been through the worst bear market over the last 4 years that in our lifetimes, basically. We've never had, well, maybe back in the '70s. I have to go back and look at the data. That might have been worse. But investors have not been used to losing money in bonds. And we're now in the fourth year. And unless interest rates fall fairly significantly in the next couple of weeks, it's going to be a fourth full calendar year of bond market negative returns.
Right.
The good news with that is inflation has slowed and interest rates, according to the Fed, are expected to come down further, which would reverse bonds as an investment problem. It would make them much more attractive. But we have the economy that's relatively strong. That's why people believe we're going to get a soft landing.
And it does it definitely appears that that's the case. It's not like people are making a case for a soft landing, trying to blue sky it. It looks like the economy's strong enough that even even with the large number of things that have gone wrong with the spending side of the economy with our government, we have massive debt still hanging out there. The U.S. economy is still percolating along quite well, and it looks like with inflation beginning to come under more control. And like I said, Don, the Fed is going to continue to lower rates. Chairman Powell says we don't need to be in a hurry. So there's not going to be rapid rate cuts. Interest rates are going to continue to trend down. And that's good for all of business in the United States and consumers. It's time to get those rates back in line with more in line with reality. They're heading there. Inflation was the holdup. That's coming back into line. So things are kind of hitting on all cylinders right now, and barring something else raising its ugly head, which can always happen, right now things appear to be on a fairly strong track.
Well, one of the other things to be thankful for is that this election cycle has come to an end.
Oh,
I think there's only one representative election vote count in California, District 13, which is not finalized yet. But with this behind us, whether you like the outcome or not, it resolves a great deal of anxiety about what's going to happen for the next 4 years. At least now there's a platform from which to build your assumptions about what you're going to do in with the new administration making policy
right.
changes.
And
And
there's a whole lot of spending that's going to stop now too. Thank goodness. There's so much money wasted on all the politics involved. Billions and billions of dollars down the drain. That's just zero return on that stuff. So unless you're one of the persons that paid to get reelected, no one else is going to benefit from that. So those dollars can be spent much more advantageously for everyone involved, and we can stop wasting on elections, for goodness sake.
well, and I guess it depends on whether you're on the receiving end of government largesse.
It's
But
true.
with the new committee of Musk and Ramaswamy looking at government spending and itemizing how much money is wasted.
Right.
I saw a list of stuff. One one item was on a research project to determine whether or not cocaine made sunfish more aggressive.
Ah,
Now,
yeah. That's important research. Yes.
I wonder how many citizens are waiting for that report to come out.
Yeah. That's a beauty.
Uh, I didn't. I closed the list up, so I'm not going to go through it. But with regard to that Doge committee, it's important to remember that this is not another government project. Musk and
True.
Ramaswamy are paying for the deal themselves, and the employees they're hiring, they are paying for them. This is not at government expense. It is a capitalist venture to find out how government is mismanaging our tax revenue. And one of the things, another thing we can be thankful for is tax revenues under the Trump tax cuts are coming in at all-time highs. We have no shortage of money to run the government. We have a shortage of fiscal responsibility by the people who run the government.
True enough, and that's why they're so terrified of the auditing that's going to occur. It's coming in from outside of the government, and they don't like anybody from outside of their little clique looking at the books because it's probably not very attractive. Thank goodness it's way past time, and just a good hard look at what's going on there. They shouldn't be too concerned, right? All we want to know is where the money's going, and there's going to be a few people with some explaining to do about not only where it's going now, but where it has gone in the past. And hopefully, we'll finally get a look at it. It didn't happen yet. And you want to talk about that swamp being deep and broad? They're in deep water there, so we'll see how far they get. I wish them the best, though.
I like Western movies, and one of the series I've been watching for some time is Centennial. And there's a series in there, a segment in there, where the auditor comes in from Boston to audit the number of cattle that are actually on the ranch.
Yeah.
The guy that runs it says, "You want to do what? It, of course we have 10,000 head. Well, I just want to count them. Well, they're spread all over 10,000 acres. How do you count them? Well, you're going to bring them in. We're going to do what? No, no, we just kind of run them through down this main street and we kind of guess at the number. Yeah, well, that's not what's going to happen here. We can be thankful that somebody actually cares enough to want to take on the project because it's a project that's been ignored by.
And we're probably going to hear that exact scene played over and over quite often here, coming right up. So, what do you mean you want to see where we spent the money? So,
Something else we can be thankful for is artificial intelligence.
oh
Just the
goodness,
way that the internet changed the way we shop and the way we do a lot of other things, the way we run businesses in general, artificial intelligence is the same kind of dynamic change for our future that we haven't yet figured out how to use. It's already
yep,
generating benefits, but how else can we use it to better our standard of living and our business operations? We don't know. We know that we're on the leading edge of this, just like the internet took better than a decade to really get its seeds planted into business itself and
you bet.
effectively used. Artificial intelligence, maybe it won't take that long because it's smarter than we think it is. But,
Right.
but we're going to watch and see what happens with it.
It is exciting that we don't even know where it's going, but that's how broad the applications are, and how fast it's moving ahead right now. It really is exciting for the not just the business world, for everyone, for medicine, for research of all kinds, anything that's been analog, anything that was analog that now can be done digitally. It's a huge boon, and it's going to be hopefully an amazing thing going forward. Going to be hiccups along the way, of course, but by and large, that is something to really be thankful for.
And artificial intelligence is not confined to technology.
Yeah,
Every industry is going to benefit. They're going to figure out how to make their operations bigger. And what that's going to do is continue increasing corporate profits. Increasing corporate profits will lift the value of those company stocks, and that will lift the value of your retirement plan assets. As long
correct.
as you're not necessarily focused on using target date funds, which we're not going to talk about on this session, but we're going to do another podcast on the problems that investors are building into their future with the use of target date funds, which at one point in time seemed to be the panacea for retirement, and
Correct.
now may in fact be an unexpected anchor in getting there. Um, let's call this a wrap. So you
Yep.
have other friends, family, co-workers who are interested in the subjects we cover. They've got interests like you. Share the link with them. Subscribe to the link. The button's right down below here on the screen. And go to Facebook and like our corporate website or corporate site on Facebook. Investor Resources. You go to Facebook and search for Investor Resources. You find that, you subscribe on that. That'll also keep you up to date